What's up, my crypto legends? In this episode, I'm going to give you my new price prediction for the end of this cycle by using the Fibonacci retracement tool, okay, and also using Elliott wave theory, and it is well above $100,000. So make sure to stay tuned in this episode. And remember, if you're an experienced trader, make sure to check out PrimeXBT. This is my favorite day trading platform. By using my link in the description, you're getting 50% added to your deposit by using Bitcoinsensus 50 as the promotion code. Now, this bonus cannot be withdrawn. It is used for buying power. I have a full tutorial down below in the description. Bybit is the one that I use for my swing trades. If you use my link in the description, you can get up to $600 worth of bonus. Now, said this, let's dive in straight into the video. Hello there, Andy here. Welcome back to Bitcoinsensus. If you're new to the channel, make sure to subscribe daily TA on Bitcoin, cryptocurrency, and also do live streams to connect with the community. Not a financial advisor. Don't buy or sell anything that I say. If you do so, do your own research. Let's dive in to my potential price prediction that will be in first or second quarter of 2022. This is where I believe so the bull cycle will be peaking potentially. Now, let's go with the first tool right over here, and this is the Fibonacci retracement. First of all, you can clearly see on the macro chart that the price of BTC is in a massive bull uptrend, okay? As you can see, there's nothing to discuss about that, right? So let's take a look at the all-time high that we did in 2011. This was the first cycle, okay? Peaking round about the $30 in 2011, and then the lower part here of the bear market was round about the $2, just below the $2. So with the Fibonacci extension, with the Fibonacci retracement tool, sorry, from the all-time high till the low here of the bear market of 2011, we can clearly see that we hit the back of the Fibonacci at 4.2% right over here, okay, round about the $150, okay, a lot of volatility. But from this moment, this was another bull cycle from the low of 2011, and we had the kind of double bubble, right, where we peaked in late 2013 at around about $1,200 approximately, just below 1,200. Now, if we zoom in here with the Fibonacci retracement, as you can see from the 4.2 levels, okay, to the all-time high of this bull cycle, if we take the ruler and we go from the 4.2 to the all-time high, we did another 750% pump, as you can see, right? So now let's take a look at the next cycle. Now remember the 750% pump from the 4.2 Fibonacci, okay, of the all-time high of 2011 to the all-time low of the bear market. Now let's take a look at the Fibonacci retracement from the all-time high of late 2013 to the low of the bear market, which was round about the $160 range, okay? So now let's go with the Fibonacci retracement here and go from the high levels to the low right over there and extend the Fibonacci. And as you can see, once we hit the 4.2% levels right over here, we still had another run up, okay? And let's take the ruler right over here and measure the percentage in gains from this point. Now, if we go from this point all the way up here, it was round about 330%, right? So that is more than half than the last cycle. As you could, like I showed you on the last cycle, it was round about the 750%. So this is more than half, 330% from the 4.2 Fibonacci, okay, as you can see here on the chart. So the gains were kind of cut in half, right? So now, just for entertainment purposes, eventually, now we can clearly see that the bull cycles are, in percentage wise, they are not going as high as the first cycles. Eventually there's more liquidity coming in the market, and it is harder to kind of double and triple, you know, that market capitalization, right? So let's go to the all-time high of 2017 and use the same tool, right? We're getting the Fibonacci retracement and going from the all-time high right over here at just below $20,000 and to the low of the bear market, which was $3,200 area approximately. Let's extend this, and as you can see, we still haven't touched the 4.2 Fibonacci here, as you can see on the chart. Now, as soon as we break this level, and I do believe so, it will be broken in the next coming months or weeks potentially, then let's take the ruler, because from the other cycles, from the 4.2% levels, we've extended on the first one 750%. On the second one, we've extended 330%, which is less than half. Now let's take a look at potentially half of 330%, right? So just for entertainment purposes, but you can clearly see that the extension of percentage is going lower. So let's just entertain that it's going to be round about half of 330, a little bit less. So let's go with 150. And from the 4.2% Fibonacci, as soon as we break this level, I do believe so that we will be having around about 150% pump after this range. So if we take the ruler and we'll go 150%, okay, to the upside, this would take the BTC price all the way up to the $180,000. So this could be potentially the peak of the bull market, okay, for Bitcoin. And this would be around about first or second quarter of 2022, in my opinion, because the bull cycles are also extending from peak to peak, and from the lower part to the peak, from the bottom to the peak of each cycle, it is taking more time. So a lot of people were saying by the end of this year, December of 2021, just because of the 4-year cycle theory. Well, no, if you check out from peak to peak and from the bottom of a cycle to the peak of the cycle, the market is extending in time, okay? It's taking longer for the market to peak. So this is why I got this theory. Now let's take a look at Elliott wave theory. And I do believe so that we are inside the 5th wave, okay? This is why we are going to be peaking in between 4 and 8 months, in my opinion. We've still got a few months, okay, run up, but eventually there are going to be some corrections, as you have seen for the last couple of days. Now, why do I think, let's go with the all-time low here of this of the bear market of 2018, which happened in December of 2018. As you can see, we did bottom out at around about $3,200. Now, if we get the first wave, which it does make sense, you want to get the first wave from the lowest part, right? So this would be the first wave. And if we get the Fibonacci retracement tool from the high, you can clearly see, zooming in here on the chart, that we did have a bounce at the 62% levels, right over here, just exactly at the 62% levels, as you can see here on the Fibonacci retracement. Let me just get this right over here so you can check out the 62% levels right over there. Now, as you can see, we did have in 2020 the C19 event, right? This was a black swan event, and this on the charts is only noise. We do not do analysis on black swan events because the percentage of the candles can go extremely far away, and this is why I do not count it. The black swan events are not counted on technical analysis, in my opinion. So this was an event that was very much unexpected, and this could still happen in the future. We usually have an event like this sometimes. So anyway, taking the black swan event out of the way, or the C19 crash, then we can clearly see that this was the first wave, right? This is only noise right over here, the black swan event. Nobody could have predicted this movement. Now, as you can see, the second wave did finish round about this range, and we've had the third wave, a massive impulse, all right, since the C19 all the way up here to almost $65,000. And just so you can check out the Fibonacci retracement, if I did take this as the ultimate low, which was round about the $6,300 approximately, then if I take the Fibonacci extension from the second wave all the way here to the high, you can clearly see that we have exactly bounced at the $30,000 here, Fibonacci golden pocket 62% levels. So taking it from this low part, because remember, we are not counting the black swan event on the technical analysis side. And this is why I believe that this has been the third wave, and this one, the fourth wave, hitting the 62% levels, the $30,000 range, and now we are in the fifth wave, and we will be having that blow off top at some point, okay, maybe at the end of the year or first or second quarter of 2022. We are inside of that massive fifth wave that could take us to the $180,000 Bitcoin, like I explained here, using the Fibonacci retracement. Guys, this is going to be it for today's episode. This was my price prediction, okay, the $180,000 just by using the impulse, okay, of the Fibonacci retracement. The percentage is going down every single time. We're not going to see Bitcoin doing those marvelous 40x, 20x. The X's are going to go down because of the liquidity. It is harder to double and triple the huge market capitalization that Bitcoin has. Guys, thank you very much. Hope you enjoyed the video. Make sure to smash up the like button and check out the Bitcoinsensus website if you haven't done yet. Here we have the latest news and technical analysis, so make sure to check it out, guys. We also have exchange reviews, so you can find where the best bonuses are and the best fees of the different exchanges here that we have on the website. The link is down below in the description. And if you haven't checked out my Bybit or my PrimeXBT tutorial, there's a video on the screen right now. Thank you, guys, and I will see you in the next one.